Hello, everybody. Today we are looking at Domino's Pizza. Reason I'm doing this is Warren Buffett, I believe, or everyone always says Warren Buffett. It's not him. It's Berkshire Hathaway. Just began investing in the company, I believe, recently, and I just heard about the news. So we're going to go into it, see what they see, hopefully, and give an analysis, give a review. So make sure to subscribe and let's get into it. All right, so starting off with the snapshot, cost of capital looks solid. Target price is much higher, which is nice to see. Long-term growth rate at 8.3%. Honestly, with a sort of brick and mortar business like this, that's probably pretty solid considering all of their business is essentially done in physical locations. So an 8.3% long-term growth rate is not too bad. Let us go into the income statement and see what we see. So for their sales, we are seeing fairly consistent performance. Looks like a lot of growth late around 2020, 21. A little bit of a stagnation around 23, but it's supposed to pick up to an all-time high this year. So that is pretty solid. Can't complain. Operating income looks good. Net income is increasingly positive. And actually, even despite the sales dip in 23, their net income still increased, which is fantastic. Now, actually, between 21 and 22, there was a decrease, but I don't really see that being any kind of a big deal. EPS growth looks solid, and their total shares is 36, 35, actually dropping significantly. Wow, yeah, their total shares are dropping a lot. So let's head over to the balance sheet, see how that situation is doing. Cash, compared to short term, is solid. Assets are ever increasing. Short term debt looks good. Long term is a bit of a problem. It looks like it's been coming a little bit down for 2 years. Big jump in 21. Before that, slow, steady rise. Now, again, one thing to realize is they have $5 billion in long-term debt, but they also have nearly that much in sales as well. So seeing that shouldn't really be the craziest thing in the world. It is a lot, don't get me wrong, but it's not too bad. Now, is it minimized? Not really. But has it been decreasing for 2 years? Yes. So I'm going to do the 0.5 there. Retained earnings is not looking great, and it isn't. Now, again, retained earnings is another thing where, like, not the end of the world if it's not positive. It's just nice if it is. So it does look like they've kind of been bringing it back over the past few years again. Huge negative jump in 2021. Most likely, again, has to do with everything else that happened in 21 with them. Obviously, COVID stuff. So that, again, is really no big deal for the most part. Let's see what the cash flows are looking like. Operating looks good. Funds from operations are growing. That is fantastic. Investing, it looks like it's mostly CapEx, which isn't bad. Looks good. Looks good. Financing, a lot of stock repurchases like we saw earlier with those total shares going down very significantly. That's awesome. And then free cash flow increasing for the past 2 years. Not too bad as long as it's positive either way. Looks good. Let's see the use of cash. So again, we're seeing very consistent and significant stock repurchases. 2021 was a big year for stock repurchases. That also could have affected some of their other metrics because they put so much into stock repurchases. But at the end of the day, those are always fantastic. So again, repurchases look good. Let's look at the debt repayment. So over the past 2 years, it's been outpacing issuance, but again, 21 they issued a lot, but a lot of that debt issuance I'm assuming went right into repurchasing stock. So that's not necessarily a bad thing, but again, for the repayment of debt, they have a lot and have really not done a significant amount to decrease it yet. But I'm sure in 2024, if we look in here, we may see some. So in 2024, they did not issue any debt. To be fair, they did not repay a ton either, but still a nice thing to see. So that is something. I'd imagine this should be in millions. I'd imagine it is in millions, but again, they have not issued any new debt this year. So honestly, I could give that the 0.5 because they have been repaying and not issuing more. So not too bad, honestly. Other than that, fairly consistent. You could see in 21 where they issued a ton of debt, but other than that, looks pretty solid. For stock repurchases, again, they have done very, very well with it. Let's head over to the ratios, see how we're doing there. SGA to sales, first up, looks like it is pretty decent, actually, especially considering the sales growth. Fairly consistent. Now, the 5-year average is 16, so it has risen since then, but so have sales very significantly. So I think that is not too bad. 20%, I'm going to say that's decent. Net margin increase over the past year, fairly stable. I want to see from, wow. So before the really high sales growth, their net margin was actually lower than it is now, which is fantastic for the current situation. An increasing net margin along with massive sales growth is amazing. ROA, ROE, again, their investors' equity is essentially negative, which isn't really the end of the world or anything, but ROA looks really good. So I am given the credit there because ROE is not anything too much to worry about. Actually, no, I'll do the half point there because it is negative. It does make sense, so it's not too bad. And then long-term debt to total equity is very negative. Again, that is because they basically have no equity, so that's just kind of how this number is. But they do have a lot of long-term debt, so I'm not doing the credit there. So overall for Dominos, we've got 19.5 out of 23 for an 88%. That is a really, really good score. So again, with the whole Warren Buffett buying the company thing, that definitely is showing there. I mean, financially very solid company. So I understand it. Now, let's get into I usually have it up right away, but I actually forgot. Let's get into some of their more recent earnings. So let's do the metrics recap right here. And we'll see some key points that we want to look at. So first up, operating metrics, company versus, looks like a little bit of an underperformance on the metrics. Retail sales growth 5%, US stores 5.1%. Pretty good. Company-owned stores looks like it's a little below. Royalties and fees a little below. So overall, the earnings report for the past quarter slightly underperformed in a lot of places. Operating margin improved, which is good. Total stores looks like is at a little bit of an underperformance as well. Other than that, looks like there was a bit of an underperformance based on the overall estimates. Now, that's not really too bad. We can see here if we go into this document, this is just their straight, what's it called? Just financial part of it. So revenue slightly underperformed. Again, slight increases. So this is their 2024 end of year guidance. So 6.6% annual retail sales growth. That's pretty solid. Annual income from operations growth, 8%, which is good. Store growth of 800 to 850 versus prior of 825 to 925. So you could say that's slightly lowered, but at the same time, they're still kind of within the same range, like 825 to 850. That is not too bad. So a little bit of a decrease in guidance. And then long-term guidance, they're expecting a little bit increase in annual retail sales and basically flat increase in income from operations growth. So overall, not the greatest earnings report. Their EPS, they did beat on EPS, 419 versus 364. So that's pretty good. They were in the upper range of the estimates. So positive thing there, slightly underperformed on the rest of it. Let's look at the chart and we could see exactly where that kind of went in. So you could see on the day of their earnings, they did actually fall and then immediately went back up. I'm assuming some of the growth here could be because Berkshire recently announced a position. So that is something significant that would definitely drive growth in the company. Key facts, 175 to 275 stores short of its target. So that is not too great. And again, it fell 13% on that news, which is kind of crazy. 40904 is... So is that after? Let me check if that's the after hours price for them here. And I can probably pull it up very quickly, but I believe that is not their after hours price unless it is. But if they did fall 13%, which would be crazy, no, it does not look like they did. So I believe that's from this here where they shot up a lot and then dropped back down. But I'm not sure where they got the 40904 from, but we'll have to see maybe in a couple of days. I'm not really sure. But anyway, long term, obviously we're seeing fairly good growth, especially over the last, this is basically a year. Starting at 368, we're at 439 now, so that's pretty solid. They are down pretty significantly from their all-time high at 568, over $100. So that is something to think about. But in terms of being a buy, that could definitely be something significant. So definitely something to watch out for, with it being, I mean, if Warren Buffett's company thinks it's a good idea, if you see the name of the YouTube channel, you know how I feel about him. But definitely could be something interesting in the near future. So that is it for Domino's. Hope you enjoyed. Make sure to subscribe, and I'll see you next time.